My name is Ayman Ismail. I'm Associate Professor of Entrepreneurship and Abdul Jameel Endowed Chair of Entrepreneurship at AUC School of Business. And it's my pleasure to have today a fantastic panel on investing in tech startups in Egypt, the road ahead. Just a little bit of context of why we're here and what we're doing and what we're going to talk about today. So for the past 5 years, we've seen a point of inflection in investments in startups. Traditionally, we've had most of the companies go to the banks or depend on family and friends, but the venture capital space has been booming substantially. The past 3 years specifically, we've seen the numbers go high. Last year, we had more than $400 million in investments. This year, we have projected more than $1 billion in investments, and other people are actually projecting some higher numbers. And we're also seeing very interesting startups that are going regionally, that are driven by venture capital funds. We're seeing local funds growing and thriving and new funds starting. We're also seeing regional funds, whether MENA-based or Africa-based, that are launching and targeting startups in Egypt. And we're seeing a very interesting environment, whether on the regulatory side or on the support environment like accelerators and incubators, AUC Venture Lab, Flat 6 Labs. And we're very happy that we actually have with us a very interesting group of, I would say, pioneers in this space. Let me do a quick round of introductions. I'll just introduce what they're doing and their titles and maybe a little bit of context about them. But I think we can actually, I will ask them to actually give us their own proper introduction and what they're working on. So first, Ahmed Al-Alfi. Ahmed is an old friend. He's a veteran of that space. He spent most of his life in the US, and then about, I don't know, less than 15 years ago, he moved to Cairo thinking that he's going to be doing private equity. And then very quickly, he decided that that's not interesting, and he moved to venture capital. Started Sawadee Ventures, started Flat 6 Labs, and also the Greek campus. And he's been one of the probably most active investors in that space. And also someone who can also give you very interesting opinions and perspectives. So looking forward to that. We have with us as well Amal Anan. Amal is on a flight that's running a little bit late, so she should be joining us shortly. But Amal worked in the Ministry of Finance for several years, then moved to the US, did her MBA in Harvard Business School. And then after that, she joined the Egyptian American Enterprise Fund, where she worked on directing investments, whether to funds or to startups in Egypt. And among those investments, actually the most interesting and notable is Fawry, which you all know about. And Amal is the Chief Investment Officer for AUC. She's managing the AUC endowment, and I think she's also working on launching a new venture capital fund. We have with us Basil Muftah, and I've known Basil since undergraduate time at AUC, graduated as an engineer and worked in industry in so many different industries globally. And then did his MBA in Harvard Business School as well, came back to the region and worked with Reuters. And he was actually one of the people who worked on the Zawiya transaction, if I'm not mistaken, Basil. And then a couple of years ago, Basil joined Noor Swede to actually found Global Ventures, which has been one of the fastest growing venture capital funds in Egypt and in the region, based in Dubai, but investing heavily in Egypt and looking at the broader region. So thank you, Basil. We have Rafa Saleh. Rafa actually comes from a different background. He spent a big part of his life in consulting. At CID Consulting, he was a managing director. And then he went to kind of explore the startup side. He founded the Founder Institute chapter in Egypt. And with that, he actually got to really look at very early stage startups. And then Rafa started actually his fund very recently, Qubit Ventures, looking at early stage startups and making also very interesting moves in this space. And Rafa is probably among the best mentors you can find as an early stage entrepreneur. And with us as well, Shihab Marzaban. And Shihab has had a very eclectic career, an engineering professor who started a company and then joined the government worked as a deputy minister for the Ministry of Investment and International Cooperation with Dr. Sahar Nasr. And then he was actually the person who spearheaded the creation of Egypt Ventures and Falak startups, and a lot of work that came out of that space, a very interesting space. And then after that, Shihab came back to the private equity, to the private sector side, and now he is starting on his fund as well as the CEO and founder of Defen Holding and Camel Ventures Egypt. So a fantastic lineup. And then last but not least, actually, we have Hiroki Ishida. Hiroki is our friend from Japan. He grew up there, and he did his master's in Hong Kong, and he worked in Accenture, and he worked in Accenture for several years and started a career in investment for more than 20 years. He moved to Kenya, where he's now a director at AIC Partners Africa, where he's looking at healthcare in Africa broadly. So Hiroki, welcome, and thank you for being with us. So let's start from the beginning. I just want to make a quick round where everybody would tell us about what they're doing, the latest updates. I want this conversation to be about basically the present and the future. So let's just start with the present and take a quick round with everybody, give us a look at what they're doing. So let's start with Ahmed. Ahmed, what are you working on right now, and what are the new updates for Sawadee Ventures?
Working on our portfolio, on expanding Flat 6 labs throughout the region. We've just recently opened Ayman. We'll be opening hopefully 2 or 3 more countries this year, and raising a new Sawadee Ventures fund. Going forward, I continue to be very optimistic about Egypt. The capital to talent ratio here is very much in favor of any investor. There is much more talent than there is capital. There may be 1 or 2 deals where people are complaining that they may be overpriced, but I actually think that Egypt and startups in Egypt are a great bargain. More people should come and invest in the region. And we like having more investors. We like having more money flowing into the region. So overall, net, very positive, very optimistic, and looking for more deeper tech companies to start coming out of the region rather than just copy paste.
Ahmed, any new updates or projects for Sawadee Ventures?
You mean portfolio companies?
The fund, the portfolio companies, anything new that's happening on that side?
Well, last year we invested in 2 chip companies. So, probably the only 2 African chip companies. So one makes a spectrometer chip and one makes timing chips. Very interesting. It's exciting. I'm learning some new things, but it's really wonderful being invested in, leading edge tech coming out of Egypt and the region.
I will ask you about this in a few minutes once we do the round, because I remember about 6 or 7 years you specifically said, I don't see high-tech companies coming out of, deep tech companies coming out of Egypt. And I'm very, 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 very happy to see that change, and actually you specifically leading investments in that space. Hiroki, do you want to tell us a little bit about what you're doing, AIC, the fund, and how are you actually, from an African perspective, and then zooming in on Egypt, what are your areas of interest?
Thanks for the introduction. Again, good afternoon. My name is Hiroki. I'm based in Kenya, but today I'm joining from Cairo. I just arrived Cairo yesterday. And we are the venture capital focused on healthcare and also infrastructure business across this continent. We set up our fund in 2017. And the fund size is $47 million US, and we have 30 portfolio companies as of today. And then now we are setting up our second fund, again, focus on healthcare, plus also some like infrastructure, which means like fintech, logistics, but still our focus is healthcare. And so far we have some portfolio companies like Reliance Health, which is an insurance company in Nigeria, raised $40 million this year. And also Chipa Cash, which became the unicorn company last year. But also in Egypt, I like to mention, we have 3, Rology, Chezlong, and Dentacards, all are in the health space. And the first fund we fully deployed, so now we are looking for the new opportunity for the second fund, which will be ready by the end of this month. And already I'm starting developing our pipelines and doing due diligence. That's why I'm here in Cairo. And why Egypt is, the first fund, we focus more Sub-Saharan Africa, but as Ayman mentioned at the beginning, we see more like inflection point in Egypt, and we cannot ignore Egypt anymore. So I'm just coming, it's a bit too late, but because already there are a lot of investors, but still I see some opportunity that also we can contribute to the startup company, because some of them are planning to come to Sub-Saharan Africa. Also, some companies are coming to Egypt from Sub-Saharan Africa. There are actually some contribution. So that's why I'm here. Thank you.
Thank you, Hiroki. And in terms of healthcare space, any specific trends or plays or types of startups that you're looking at that are benefiting from a lot of the changes that are happening now?
Yeah, and we look at both. I mean, the traditional brick and mortar model and also health tech company, because we believe still both are important vehicle for the improving the healthcare situation. But in the healthcare space, we are quite keen on like pharmaceutical related business, like distribution, also e-commerce, marketplace, and but also we focus on more B2B business in this space. Then maybe some of them are expanding to B2C. Yeah, those are space maybe we are looking at, but generally we are looking for like EMR, also patient data management, those things as well.
Fantastic. Thank you, Hiroki. Basil, do you want to tell us a little bit about what you're doing, new interesting news? I know that you've got a couple of things that you're working on as well.
Sure. First of all, thank you so much for having me, and it's great to be to see you again, Ayman, and see everybody on the call. Lots of great colleagues, friends from around the industry. So Global Ventures, I think, as many people know, is set up out of the UAE. We have offices in Dubai and Abu Dhabi, but we also have offices in Saudi, Jeddah, Riyadh, Cairo, and in Lagos in Nigeria. Those are our locations where we have people on the ground. We're a generalist fund focusing on kind of Series A. So we're investing after the seed stage, after the early stage, kind of I guess what you call the first institutional round that usually has multiple syndicated VCs working together, putting together the right amount of capital to help a business that's established its product, but looking to grow both in its local market and maybe even regionally and globally, depending on what they're offering and what they're doing, obviously. We're on our second fund, I guess. So first fund, we raised 50 million deployed in 2019, early 2020. Then we raised our second fund in 2020, and we've deployed most of that now. In terms of our primary tickets, we still have some money for follow-on capital to support our existing portfolio. We're in the process now of raising a couple of different vehicles. One's an opportunity fund to back the growth companies in the region and help them grow faster. We're also doing a small Web3 fund, which is very much focused on this latest world that we all live in with metaverses and NFTs and all of that. There's been a lot of interest in that space because of the rapid kind of adoption that we've seen. And then finally, we have a vehicle that we'll be announcing, inshallah, on Sunday, that's really focused on fintech in Egypt. This has been in the news a little bit, so I think I can talk about it a little bit. But let's say the official kind of program takes off on Sunday, and this really goes down, to what Ahmed and Hiroki and I think everybody's saying on this call, which is Egypt's a place to double down on. There's a lot of great opportunity, a lot of still a very significant number of let's call it unbanked, underbanked businesses that can't receive credit, working capital facilities. There's just so much happening in the fintech and even fintech enabled space that we believe having a dedicated vehicle for that is a great opportunity for investors, but also to help Egypt make progress, I would say, on the financial inclusion side of sustainability, if you like. That's what we're up to. I will say this though, a lot of our time over this past quarter has been focused on the portfolio. And I think Ahmed mentioned this and it shouldn't be overlooked. It's been a difficult quarter. A lot of the market conditions haven't been easy. And while there is capital available, I believe in the market, investors are a little bit more cautious given the valuations and kind of what you've seen on the public markets and the inflation and some of the issues around that. So most of our time has actually been looking at our portfolio, working out with them their runways, when they're going to do their next raise, introducing them to other VCs. As I'm sure you know, VC is like a team sport. We pass to each other. Some people do early, some people do later, some people do certain types of sectors. So a lot of the work has been around that. And I think that comes first at this point, because deploying more money is not only the job of a VC in my mind, it's also supporting the portfolio through the journey and all the ups and downs that come with it.
Thank you, Basil. Fantastic. And congratulations on the new funds. Looking forward to hear about that. Rafa, thoughts? Tell us a little bit about what you're doing, Qubit Ventures, and any thoughts on what's happening now?
Sure. Thank you, Ayman, and thank you for providing this opportunity for me to be amongst such a fantastic panel. طبعا أحمد ألفي مش عايز أكبرك في السن بس I always see you as the godfather of this industry. But it's a real pleasure being amongst you guys. احنا with Qubit Ventures, we've just recently launched. We're doing our second close very soon. We've just started deploying capital. We're Egypt focused. 80% at least of our portfolio companies will be in Egypt. I think and a big part of a reason for that is I think we're at the right place at the right time. Just like everyone mentioned on the call here, Egypt is we're lucky to be part of. We have the best of both worlds of being a Middle Eastern country and being an African country. So being Middle Eastern gives us a lot of access to capital, access to talent, access to international markets, and being African also provides this gateway into Africa. But it also the African bit in our ecosystem is how nascent the ecosystem is. It's such a huge market. There's so much room for disruption. A lot will happen in the coming very, very few years, and the opportunity is just massive there. So there's so much room for investors, from across the world to look at Egypt. We're still at, started funding in Africa in 2021. If you compare Egypt to the rest of Africa, South Africa is 15.9 cents per capita. Senegal is 13.3 cents. Egypt is 5.9 cents. It's very, very low, and that is nothing compared to more advanced markets like in the US, where it's surpassed the $400, in France, where it's surpassed the $40, in some neighboring countries where it's surpassed $800. So there's so much room for further capital and further disruption into the market. So we're very, very happy to be here as well.
Thank you, Rafa. Very interesting statistics actually on the cents and dollars or hundreds of dollars. Shihab, pleasure to have you with us. A quick introduction and quick thoughts on what's happening while you set up your desk.
So thank you, Ayman. Thank you, everyone. Really happy to see all these faces. Long time no see. So just briefly, what we do at Camel, we are 100% Egypt-focused investment vehicle. It's a balanced investment vehicle in terms of focusing mainly on fintech and fintech-enabled companies in Egypt, operating in Egypt, and balanced in terms of having both an equity side as well as a venture debt side to complement the requirements and the access to finance relevant to a large amount of startups in the ecosystem. We focus mainly on our portfolio companies in terms of value creation and growth, and also to create synergies, especially across the portfolio and beyond. We have already investments in more than 8 startups, mainly in the fintech or fintech-enabled space. And we're very excited about the local market, and we see, as Alfie, Basil, Rafa, and everyone was saying, huge potential in the local market, and also looking forward to partner with all the funds on a local, from a local perspective.
Fantastic. Thank you, Shihab. So great round of introduction. And I think let's jump into a set of questions actually on what's happening in the space right now. And I was wondering if I should take them in the logical sequence, going through the kind of the process, or actually maybe get to the more interesting ones that will maybe get the more opinions at the table. So let me start with the latter and talking more about the valuations. Everybody's talking about valuations for startups right now. And I talk specifically to founders of traditional businesses, people who have been in the industry for 20, 30, 40 years, and they're just going crazy about the values that people like you actually are assessing those companies or valuing these companies. And the question is, where are those numbers coming from? I've been running a business that is actually EBITDA positive, that's generating cash flow for the past 30 years, and we're making a ton of money. And then suddenly I find this company that's coming next to me that's valued higher than my company, and they have 0 revenues or very little revenues, 0 profits, negative profits, a huge cash flow burn, and a young team that doesn't know anything about the industry. And at the same time, they still don't have established operations. So let me ask you all, where does that value come from? And why would you actually believe in putting money in companies at those numbers? And then the derivative from that question is, do you think there is actually overvaluation in the startup space? So I'll open it for whoever wants to jump in, and I'll make sure to get to the rest after that. So who wants to start? Nobody wants to start.
I'll jump in. That's fine. I'll help you, Ayman. No worries. Let's get going. You know, that question gets asked a lot, and obviously it's a difficult one to fully explain, because VC does have a different model for how it does valuations in general. And the model is based on not doing, let's say, traditional discounted cash flows and things that finance or private equity makes sense, but rather the element of what I would call partitioned, if you want, or investments over time to see where the potential of the business may go and what happens. And by tranching, you create 2 things. One, you make sure the entrepreneurs and the management team has a lot of skin in the game, so that they're incentivized to really grow fast and quickly and to use the money wisely. You're not giving them their full capital upfront. You're giving them enough, typically for 18 to 24 months. And the idea is that as they hit their KPIs or the different gates that they have set themselves, they get to, over time, normalize their valuation to where it would be from an industry perspective. So when somebody comes with just an idea, and let's say you put a valuation of, I don't know, $1, $2, $3, $4, whatever $million on it, the business is worth 0. Let's just be clear. We know that. It's not like we don't know that, right? It's just an idea. But You're trying to say, here's, let's say $500,000 or $1 million to get started. I'm going to take 20% of your company now and leave you 80%, that if you can show me that this idea works, then I will be able to go to the next stage. And then the next thing happens at the next stage, like $15-20 million. Again, how much you need to keep growing? Let's say another $5 million. So I'm going to take another 20%, and so on and so on. Over time, things will normalize. So when a company reaches a full maturity, it will reach a certain, number that's more comparable to what's really happening in the public markets or what's really happening with traditional businesses. That's how VC works. The reason why we do that is to manage risk. We don't want to put all the money in from the beginning, and we don't want the entrepreneur not to be incentivized to keep building quickly and to see how far they can get. Obviously, there are other things like scarcity value of that entrepreneur, the technology they're building, that could also, so fintechs tend to get a little bit of a premium because it's a more trendy area with bigger opportunity in some people's minds. Health tech recently with COVID has also gotten a bit of a premium in some cases. So there's different sectors that may be higher or lower depending on what's going on. Today, quick commerce, for example, is getting a lot of premium, right? For the life of me, I don't know why people need everything delivered in 15 minutes, but it seems like that's something that people care about. So it's getting a premium from some investors. Those are the things we work with. Those are the elements we work with. Obviously, entrepreneurship is risky both for the investor and for the entrepreneur. And the idea is that they get well rewarded by the time they mature and exit their business by having a meaningful stake in the business.
Thank you, Basil. Ahmed, any thoughts? You've worked with many early stage companies, especially through Flat 6 before even getting into Sawadee. So you have actually made the small amount investments in the very early stage, as well as the relatively larger tickets in Series A and then follow on in Series B. Any thoughts on valuations today?
So the early stage companies are very much like Basil outlined, the partnership. And I would say that the key thing to really think about is we're partnership model. We're not more than investor model. So while Basil probably could take 80% of the company on the first 500,000 from an entrepreneur, if you do that, you doom the company. So we go in a model that is partnership friendly and allows us both to grow together, right? And both realize our full potential. The other thing I would say to the people that possibly you mentioned at the beginning that you talked to that have traditional businesses is their future prospects. Do they have future prospects to grow 100x? That's we're paying for the future. With asset companies, you're buying assets and buying the past. And with entrepreneurs, you're buying the future. So as an investor, we have to think differently than somebody investing in a food manufacturer, for example, or a manufacturing company. You have to think of what can go wrong and how do you protect the assets and how do you protect your downside? And in ours, how do you maximize the upside and what can go right? And so the VC market really looks at, or the VC investors are looking at what can go right and how far can it go? And that's really what you value. We will have companies from the accelerator because you invest at such an early stage, small amounts, that'll grow. You'll have 200x, 500x, 1,000 times your money on some of those. When you invest at the later stages, you're looking to make 5, 10 times your money. None of the companies where it's an industrial company will you ever make 10 times your money. It's especially if they have assets. So it'll be very, very, or at least in that short window. You couldn't make 10 times your money over 20 years, but you're not going to make 10 times your money in 2 to 5 years. So that's really what everybody needs to keep in mind when looking at why valuations are higher. Valuations, when we started Flat 6, 10, 11 years ago, were substantially lower because the odds of success were lower. And the reason is there was very little, if any, follow-on funding to do what the companies need, which is fund the next round and the next round, continue to refuel them. Now, as you see, 10, 11 years ago, a VC panel in Egypt was, 1, 2 of us. Now there's 5, 6 of us, and probably another 10 that could be participating at different stages in the cycles. That's magnificent. That's just the beginning, right? And that increases the chance of success of these small companies. We have had several really, really good companies and really good entrepreneurs die because they couldn't get funding from the early cycles in Flat 6 Labs. And you know them, you were involved, you mentored several of them and participated in that. So that's really what's driving it. And I'm still a big believer that we're going to see multiple X's of what we've seen for Egypt as a market, right? As a whole, not just individual companies. I'm very happy with my portfolio, our portfolio, but I'm really happy with the full ecosystem. And I'm not going to invest in every winning deal, right? Because there's a lot of other good investors around there. And I think that's great. So the market has changed. Whereas if you missed a deal 10 years ago in Egypt, how could you miss it? Because there's only 3 successes in the country, right? Now there's 3, 4 a week. It's fantastic.
So Ahmed, you think that the primary reason for the growth and valuation is that now the opportunities for the startups to get follow-on investments are higher, therefore the chances of success are higher, therefore you believe that these values are actually reflect actual business opportunity from your side?
No, that's one. The other thing is the talent pool that's participating as management in startups and in high growth companies is tremendously stronger than it was, right? Senior managers, former bankers, everybody is seeing the opportunity. And many people are taking the leap, taking the risk of really participating in that. And the last thing is the environment has changed. I mean, Bassel mentioned fintechs. The regulator is being very proactive, right? In fintechs, Shihab, could you, 5, 7, 8 years ago, somebody building a fund focused on a single vertical like Shihab is doing on fintech? Wasn't possible. The market wasn't that deep. The market is that deep now, and there is a very, very high likelihood of success for somebody to focus on a vertical. That's another, I guess, indicator of how the market is maturing and how much breadth we have in the market. That before there was 2 fintechs in the country. That's the only thing you can invest in. Now he gets to select from a very broad pool of fintechs. So I think that's the third factor.
And Ayman, your question has a, sorry, you're making an implied assumption that valuations are high, right? So you're starting from a comparable of traditional assets, etc. The question of valuations is a question of what returns does the investor expect, right? And let me be clear, we're targeting incredibly high returns. We're looking, on average at a fund level, 30 plus, let's say, right? IRRs. To be able to achieve that, these companies have to grow in incredible rates, just to be clear. And the reality is Egypt is not digitized. Let's just be clear, right? There's a lot of opportunity on digitization. And that's what we think these fintechs are solving. And that's why we think they're going to grab a lot of market share. Now, interestingly, traditional businesses, traditional businessmen, and even the government to some degree are starting to enter the space as well, right? With their own funding, with their own projects. And so the dynamic is starting to change in the last 12 months, I would say, and how to think about that. But I would say a year ago or plus, it seemed like any idea to digitize pretty much anything in Egypt had a huge potential.
Ayman, you mentioned one of my old comments before, but I'll remind you, yes. And I'm sure you and Shihab remember my old comments many times. And I said, all we really need is 1 or 2 success stories here. And all the people who invest their money in cement plants and interests will realize the opportunity that's available to them in VC and in startups. And you'll see that money migrating. And we're all seeing it. All the wealthy family, the family offices, the people that were going to think of investing $100 million in the next cement plant aren't thinking that anymore.
Yeah, absolutely. And by the way, I'm not coming from the skeptical perspective. I'm definitely one person who's been on this side for the past decade. But I just wanted to actually put forward some of the thoughts that I'm hearing every single day and get reactions from people like you who are actually the actual ones who are making the decisions, because people wonder, how are you making those decisions? Actually, let me ask Shihab, and I'm going to ask you, Hiroki, about something from an African comparative perspective, but I want to ask Shihab on that point that Ahmed was mentioning, the local market, because Shihab, you're running your fund as a local Egyptian company, not an offshore. You're raising from local LPs, you're raising from local investors, whether family offices, individuals, banks, and other organizations. That was not possible 2 or 3 years ago. So can you tell us what does that look like when you go to those investors, very conservative in background, and tell them, I want to take your money, and by the way, I'm going to invest your money at those crazy valuations, crazy multiples, and I think I'm going to actually make you more money than what you are doing in your traditional businesses. How do those conversations go?
It's a very valid point, Ayman, and I think people like Alfie, and I always tell him that they set a strong base of change in terms of how people, mainly investors, institutional investors, are also thinking from that perspective. Mainly, as you mentioned, we are a local vehicle, a purely local vehicle. For us, we focused on having a local investor base, which is mainly financial institutions, either from the banking side or from the insurance side, as well as a couple of family offices. And there are multiple reasons why they are on board. One is the COVID. One of the COVID side effects was that it speeded up the digitalization process in general, and the awareness about going digital, and especially also in the fintech space. So this became more and more a key enabler, which opened the eyes for the typical conventional financial institutions to say, okay, let's get on board, let's work together on that, and let's be part of that journey, even if it's with a small amount from that perspective. Another element which had a significant impact, which was also mentioned by Alfie and by Basil, is regulation. The shift which happened in terms of regulation, especially in the banking, in the new banking law, referring to digital banking licenses and the fintech element, as well as the FRA pushing more for the new law in terms of fintech, created also a spectrum where everyone was seeing, okay, this can become even a high growth formalized sector, because before that it was not formalized. Like BNPL players were not regulated before by FRA, they were under GAFI as trading companies. So more and more a shift happened in terms of regulation, in terms of supporting that. And the third element also was through the central bank, the circular where the central bank started to encourage mainly the banks to invest and finance venture capital and private equity vehicles, and which would add up to their SME ratio. All this together enabled and supported from a regulatory side and opened their eyes from that perspective. We had a good benchmark as well that previously we did with EFG and Egypt Ventures. We did a very similar exercise to have a joint fund in the fintech space, where also we had a nice track record in terms of investing in different fintech companies and showcase that growth. And all these financial institutions also saw very clear that if you look into a standard non-banking financial company in the microfinance side and the consumer finance side and so on, they hitting annual growth of 20 to 40% is very nice for them, but they have to go and expand through physical presence. The growth is not there, whereas they see now very similar products and services from fintech players who are able to scale much faster at a much higher growth rate. And this makes also sense in terms of the valuations and ongoing perception to hit on the fund level IRRs higher than 30%, as Basil was mentioning. The last element I just want to add regarding the valuation, the element you opened up, is the ecosystem evolved heavily. The valuations, most of them make sense, but which will validate these valuations is to see also the end of the tunnel in terms of the exits. So on an unrealized element, we see higher valuations. We see this. The ecosystem has to evolve in terms of acquisitions, in terms of listings, either local listings or cross-border listings, and all this will validate and will create these 1-2 successes Alfie was referring to a couple of minutes ago.
Yeah, Shihab, let me follow on something. Everybody here is going with an equity model. You're probably the first person I know about locally who's actually looking at a venture debt model, a combination of equity and debt. Why are you getting on that space? What's the opportunity there? And actually, for the uninitiated, how does it work? What is venture debt compared to bank debts?
So venture debt is a very hybrid financing model. So we focus mainly companies which already are VC backed. They have already raised equity financing through VCs, and the objective for them is mainly in the fintech space is we're focusing on companies which do on lending or on financing, so we're directly linked to the top lines from that perspective. And instead of growing their balance sheet or their portfolios through raising further equity, which is diluting them as well as their existing cap table or their existing VCs, we're extending this venture debt in local currency, so there is no hedging issue or no currency exposure from that perspective. And attached to the venture debt is a warrant coverage, which enables us to convert part of the debt into equity. And the core objective, or who we are core serving, are the ones who are not yet eligible to banks, who are not able to go and get financing. Any optimal capital structure is based on a mix of debt and equity. Most startups in the local ecosystem do not have any access to debt yet, or do not get it except with personal guarantees and so on. And this is the gap we are trying to fill. So actually what we are trying to do is to complement the ecosystem and to work closely with the VCs, because this will create a very much win-win situation between Camel Ventures and other VCs in the market.
Very interesting. Thank you, Shihab. Very interesting and pioneering, and I'm sure there will be many companies that are very interested to have access to this kind of investment and avoid early dilution. Hiroki, let me ask you from, you see a Pan-African perspective, which is very different than just focusing on a single country. How does the Egyptian market, back to the valuations question, how does the Egyptian market compare to the rest of the Pan-African the continent? You're investing in Nigeria, you're investing in Kenya and South Africa. How do you compare that in terms of the kinds of startups that you're seeing, the types of opportunities, and also the valuations?
Thanks for that question. That's interesting that early this month we had a Africa Tech Summit, also Sankalap in Nairobi, and there are quite a number of investors, and we are having the very same discussion about the valuation from the perspective of the Sub-Saharan Africa. And still, I need to do more experience to compare the variation in Egypt and other market in Sub-Saharan Africa. But what I'd like to say is that it's again supply and demand issues. And let's pick up an example between Africa and Japan, Africa including Egypt, of course. And when I set up our first fund in 2017, there are no other venture capital from Japan. We are the first one. And also when I pitched to the potential investors in Japan, they were saying, "Are you crazy about?" So they have a very limited idea about what's happening in this continent. And then we are starting educating them what was happening on the ground. But as of today, at least we have, I say, 4 venture capital acting in Africa. And also recently, Global Brains, which is also well-known venture capital in Japan, investing in Shepherd. And then that's great news. Also, there are some corporate venture capital such as Toyota vehicles, they have like mobility, and also now they are going to invest in a different sector. And so I see more like investors, and also Pan-Africa. Last year, we had like over 800 investors, which made at least one investment across this continent. But when I moved to Africa in 2015, there are only like 40 or 50 investors. So I was just counting on them and just sending email each at that moment. And but the situation is completely different. But also in terms of variation perspective, now because of digitalization, the company can maybe expect some partnership or new revenue stream in the future. For example, there are health tech companies, they have like patient data and they are managing. And though maybe it's not generating any cash at this moment, just charge a subscription fee from the facilities. But in the future, there are a lot of companies. For example, one of our investors are pharmaceutical companies, and they want to do something in like NTD, neglected tropical disease, but they don't have access to patient data in Africa. So traditionally, they use like NGO or local people to provide some data. But now, if they can have a partnership with like a startup company who manages the data, and then they can make it more cost effectively, then I'm sure they pay some fees for that startup companies. And so these kind of things are happening. So maybe because of the difficulty to do business for other people in Africa, maybe other investors outside Africa see more value, and that could be kind of additional value, and for their valuation perspective.
Thank you, Hiroki. And in terms of let me follow up on the health care side, because you're focusing on that sector. How do you see the progress in that sector in Egypt? What are the different opportunity areas that you're looking at?
Yeah. And I am quite excited about the market healthcare startup companies in Egypt, especially because they are robust, like fundamental of their economy compared to like Nigeria, Kenya. Still, we also focus on those companies, but for example, pharmaceutical market size, roughly Egypt is like 6 billion, but Nigeria, it's a big country, but the market size is 3 billion, and Kenya 1 billion plus. So you know that it is quite big market, and also, but still, most of the people are not insured, and there's the possibility that the company, startup company, can provide a significant role in their future. So then there are more people who can afford to pay for their treatment, and so I see more opportunities here in Egypt, but also I also expecting more. Like when I visited Egypt in January this year, I did like research on developed a list of the startup company in the healthcare sector. There are only 70 companies, 70, that are who raised some funds, and the question is it big enough or small? And but considering these opportunities, I expect we can. It's not strange if we have like 100 or 200 startup companies in the healthcare sector. So it could be one of our today's topic, but how we can encourage more entrepreneurs to do more. And then I'm sure more investors will come to this country.
Fantastic. Thank you, Hiroki. Rafa, let me ask you and bring multiple threads, one of them the valuation, and then the other one where you're focusing at the early stage. And that's probably the toughest stage in terms of selecting the startups. So let's start first with the question about valuation. Are you seeing that same increase in the valuations of companies in the early stage? And one of the observations that I see is actually a wider range from companies that are raising at very small values, very small tickets, to others that are raising huge tickets at huge values, and all of them in the same pre-seed / seed stage. Why is that variation? How can you explain it? And what's your thought on it?
Sure. Actually, sometimes I fail to explain it, but in many cases, it's quite justifiable. It really depends. When we're looking at companies, we take so many variables into consideration, and of course, just like everyone here on the call said and Alfie said, and is we look at the future and the potential for this business. Now, you may see two companies more or less in the same business, more or less at the same stage, and one of them is raising at a valuation far larger than the other, and it's successfully doing so. But then you need to do the homework and look, why is that the case? You will find reasons for that. You will find, for example, that the founders themselves are far more mature. They come from the industry, they have the network, they have the connections, they have a solid investor that is giving them their first push, but it's not just a financial push, it's also a market entry push. So they already are securing large clients. Or, for example, you would find two fintech companies working along the same thing, but one of them is already way ahead of the other in terms of the approvals they got from the different regulators. So it is when you start digging deeper, you will discover a certain rationale for this difference in valuation. Having said that, I'm not a very big fan of party rounds where there are so many investors. Everyone is talking about that same deal, and there will still be those diamonds in the rough that we will find at very, very reasonable valuations. And at the end of the day, it's for no one's interest to overvalue a company at its early stage, because that will affect its coming stages as well. So, I urge everyone, not to push too hard when it comes to valuation, and just give this room for this company to go from one round to the next. But at the end of the day, as long as the narrative makes sense, we're happy, to look at different companies at different valuations.
You mentioned something about comparing the founders' skill sets and the founders' network connection pedigree. Do you think that this founder premium is actually justifiable at the wide range that we're seeing right now?
Oh, absolutely, yes. Now, when everyone was speaking about the differences between startups and traditional businesses, or the difference between venture capital and private equity, two main things came up. So one is basically with venture capital, we're more looking at what can go right. With private equity, sometimes it's what can go wrong. We're also, so it's a different mindset altogether. We're in the game of, private equity is more in the game of averages, whereas venture capital is in the game of outliers. But then at the end of the day, the other big difference, in my opinion, is that venture capital we're in the business of people. It really boils down to the founders and the team they've been able to build versus later stage companies. And because, at the end of the day, even if, especially for us coming in at seed stage companies, we may find an opportunity that is backed by a fantastic team, yet the business model needs to adapt and needs to change a bit. But we know the team can deliver on that promise and eventually at least do a minor pivot and take the business into that right direction. So we definitely give a lot of weight to the strength of that team.
Rafa, you work at the very early stage, and I know that when a company comes to, let's say, Basil, and it's been around in business for a couple of years, he has some track record. But when you're looking at very early stage, the track record is very little, because the company is really young. How do you actually make your decisions? What's your thought process in terms of selections?
We look at multiple things. Let me start off with the one that I cannot translate, which is a gadana. Seriously, at that early stage, you need to meet with the people physically and get this feel of al gadana. Are these founders that can really what's the word for Gadana, Ayman, to translate to Hiroki?
I don't know, chivalry,
grit, or I don't know, do they have what it takes? If these founders have what it takes to create a big growing business, a successful business, an enduring business, then that becomes a very important factor. We look into early product market fit. Numbers don't have to be massive, but at least we need to see good indication of product market fit. So that's why we preferably look at post-revenue companies where actual customers did actually pay for that particular service. We look more on the nature of the problem they're solving. We like a company that is solving an acute problem that is addressing the masses or addressing a real need in the country. We all live here. We know what's going on. We know the needs. We have a flavor for that. But still, we want to get not advisors and not mentors validation. We want to see actual customer validation.
Very interesting. Any thoughts from Alfie or Basil or anybody else on the founders premium? Ahmed.
I actually just wanted to add a thought kind of to what Latif said. If it's one of those businesses where you need a calculator to figure out if it makes sense, it's not for VCs, right? Because the cases we look at are so compelling that if the entrepreneurs get it right, it's a home run. So it has to make so much sense that you don't really need to do a IRR calculation on it. It either makes sense or it doesn't. It gets executed or it doesn't, right? Or it's a bad idea and it fails because we all got it wrong from the beginning. So, and the founders, definitely second-time founders who have lived and grown in a high-growth company are very, very different types of founders because they know what it's like to drive at 200 miles an hour. That's a different experience. Very few managers have ever gotten that experience in traditional businesses.
I completely agree with that, but let me challenge it from a different angle. The way you mention it is that you make it so easy to actually select a company. But when I look at all of you, I see that there's some companies that Ahmed, you loved that probably Basil hated, and others that Rafa loved that probably Hiroki or Shihab hated. So you make it seem like it is
or that loved Basil and hated us. Okay.
I don't know, but you make it seem like it's actually a very easy decision, but in reality, you have very different perspectives on a company. You can see a company and you find one person valuing it at $1 million, the other valuing it at 10, and the other not even putting 5 dimes in it. Why is that?
My comment is not meant to be facetious. My comment is meant to be very serious in completing your thought that an entrepreneur, as much as an entrepreneur may like one of us and not the others, the chemistry is very, very key, right? And when Rafa said that you have to meet them and see what they're like, if there isn't chemistry and you're not going to add value to the entrepreneur and to the business, probably not really a good deal, right? For you, it's good for somebody else. And we, all of us, have different tastes, right? I like certain company, he likes different company, somebody else likes a different type of company. And additionally, I like a certain type of entrepreneur, okay? Somebody else may like a different type of entrepreneur. There are 1 or 2, 5% of the entrepreneurs that all of us will like, right? Because we all see the same things, and that is a more complete, aggressive entrepreneur, right? That we'll all see that this person has a high chance of success, and almost every one of us would look that way at that person.
Let me just take that a little bit further. So what does chemistry mean, right? Because everybody says, oh, it's about chemistry between the VC and the entrepreneur. We've actually passed on deals where we like the entrepreneur very much. We like the business and the idea and the space very much, but we didn't feel we were the right investor to help with the stage of what they're doing. Chemistry isn't just likability, right? That's one place, sure. Nobody wants to work with somebody or partner, as Alfie said, with someone that they don't like. I mean, that goes without saying in most human transactions, I would say. But liking doesn't mean I have to, like to go out with this person in the evening. Liking means I like the way they think, the way they process business, their transparency, their honesty, their way of communicating, the experience that they have and how relevant that is to the, to the problem that they're solving or the business that they're building. There's all sorts of factors on likability. But there's also a consideration every VC goes with is, what does my current portfolio look like? How much time is that consuming? If I take on this additional investment, what type of level of support do they need? The earlier, generally the more type of support. Not always, but generally the more type of support. The later, the more targeted the type of support, but it can be very complicated, right? If I have a company, we invest globally, we have global LPs, regional LPs, local LPs, all of that. But if we feel like a company is coming to us, and I'll give you an example, in very much a business to consumer e-commerce place, a lot of times global ventures in that space in particular will pass. We look at them, we have invested in B2C e-commerce businesses, but we don't believe we're the best necessarily investor in that space, right? We like B2B businesses, we like software businesses. Our LPs like those types of business where there's a high recurring revenue, predictable revenue, low churn rates. Those are the types of things that we're excited about. Again, we look at all sorts of things. Ahmed's right, we all look at pretty much the same thing. It depends. A few of us see some things earlier than others, or vice versa. That's okay. But ultimately on the journey that I talked about at the beginning, which is, investing at different rounds, when we come to the stage that Global Ventures looks at, we say to ourselves, okay, what type of help does this entrepreneur need? Do we have the bandwidth to take this on? Do we have the skills and the capability to help? Otherwise, honestly, we're kidding ourselves, right? We're setting expectations in a wrong way. We're telling the entrepreneur, hey, we love you, we can help you so much, we can do so much, but it's so much more than capital that matters at the end in VC, as anybody who's worked in VC will ever tell you. The money, yes, tough to get sometimes. And I know entrepreneurs complain a lot about availability of capital. It's meant to be hard. It should be competitive. If it's not, there's a problem, right? It's hard everywhere, by the way. It's hard in the US, it's hard in Europe. People try to make it seem like it's easier in other markets. It's not. There's just magnitudes different, right? It's bigger in the US, but then there's so many more entrepreneurs in the US that are also competing. But once you get past the stage of being hard and you're being considered, you're also being considered for likability, but also can we really add value?
Any other thoughts?
I will attest to that.
Rafa, go ahead.
Yeah, I will attest to what Alfie and Basil are saying, and we also look, what basically aligns with our investment thesis. We may find an opportunity that is, fantastic on all fronts, but just like Basil was mentioning, it is not something we can help with. So if I'm looking at two companies that are more or less equal across all other parameters, which is never the case really, I'd prefer to support the company that we can actually help using our network. So our network is definitely different than Sawadee's network, different than Global's network. Each one of us knows what our network is, where it is. For example, if we're looking at a company that has the potential to partner with Stripe, we're happy to give this a priority because my partner is an investor in Stripe. So we will give that an extra attention. So it's back to what Basil said of, finding this match of where we can help out. The other factor that sometimes startups are not aware of is there's a limitation on dry powder as well. So I may have within that particular, period of time, room for just 2 investments. And I have 5 companies that I'm actually very excited and I'm, very excited about, and I want to go in all 5. But at the end of the day, this is where the hard decision comes, is that I have to invest in only 2 of those.
Very interesting. Shihab, you wanted to say something on that
well,
part?
it's I think most was already mentioned, but so it's always to find the balance in the entrepreneur and the team in general, having to be complementing each other. We have met a lot of startups where we see some of them coming from top Ivy Leagues, top ex-consultancy firms and so on, but lacking the local knowledge. And the local context is very important. And we see that as a core element. And regarding the chemistry or gadana, which was Rafa referring to, I think it's also what we always try to see is a balance between being stubborn and being coachable. I don't want someone who is completely coachable. So you could as an investor or as an advisor, pivot him completely from his mindset, but he should also not be completely stubborn in terms of it's my way or no way. It's finding this right balance. Yeah, it's not very good that he's completely coachable 100%, and it's not also as well good to be fully stubborn. So this balance is also very important.
Another factor as well is the portfolio. So for ourselves, we're an agnostic fund. If I find that a majority of my portfolio companies are within a certain sector, then definitely I'll give priority to other sectors. For, of course, a sector focused fund, that's a different story. But still, even for different funds, sometimes in terms of risk appetite, I would want to de-risk my portfolio with a more stable company at some point of time, or no. Each one of us or each fund has its own investment thesis, and that includes the portfolio structure and where we are within that structure, and where does this particular opportunity fall within that structure.
This is very interesting, and probably I would want to dig deeper on the portfolio construction, which is something that usually is very opaque for entrepreneurs, but you guys look at it from a different angle. But let me ask Hiroki on the same chemistry issue. How do you see that, especially that you're operating in a huge wide range of countries that have very different cultures? You yourself come from a very different culture, but you actually are still making the same assessments and judgments that Rafa, Ahmed, and Basil and Shihab were talking about. How do you find? Hiroki, are you still there? Okay. So until Hiroki is back, let me jump into another point that I think most of you touched on, and it's actually a tough point, which is related to talent. I remember 5-6 years ago, most of the entrants into that space were usually very young, kind of dreamer, really entrepreneurial, who were thinking about getting into that space. But today, we're seeing a very diverse background of seasoned executives, people who spend some time in consulting firms, people who spend some time actually in corporate careers, local, global, regional experiences, corporate experiences. We're seeing a wide variety in the range. I mean, in AUC Venture Lab, we get people from the early 20s all the way to early 50s. What are your thoughts on the talent pool, both on the entrepreneurial talents and also on the tech talent, which is another part that we really need badly? Any thoughts? Who wants to jump in?
On that particular note, just to start off, the one thing that I would always put a lot of emphasis on is the drive to go big. That spark in their eyes, regardless of experience, regardless of age. If the founders don't have this very, very clear obsession with creating a huge business and really disrupting this industry, then we're not that excited. We need to see this excitement with the founders. That is number one. That is even before looking at anything else. But yes, as you've mentioned, I see a different set of founders joining, coming into the market now, more mature founders, founders coming from consulting firms, coming from multinationals, and basically trying to disrupt the business they come from. That adds a lot of value. We know they have the connections, they have the know-how, they understand the groundwork in relation to that particular business. So that we take that into consideration. age is not in our case, age is not a factor. It's finding this mix of, are you the right person within that particular industry, coupled with that spark and this obsession with disrupting the industry.
Can I just add something, Rafat, to what you said? Go big for sure is always a theme. Definitely, if we're going to pay these valuations, then there's a point around getting, being big, if you like, and getting to being a successful size. But I also think entrepreneurs need to keep an eye on some other metrics, right? Profitability is always a question, even though some businesses, when they first start, are unprofitable, even at a gross margin level. We understand that. We understand that you're buying market share, but you can't stay forever in that mode, right? That just doesn't work. The churn rate and the stickiness of your clients is important. So we've invested in a few businesses, which I wouldn't say they're go big businesses, but we love the metrics, where we have 80, 90% gross margin and like 2%, 3% churn rate, right? So meaning 97% of customers come back and keep buying the same service over and over again, like a subscription business. Those can be very valuable, even if they're not going to go big. But if you get in early enough, we can grow the value, and then someone can acquire it and make it part of a bigger portfolio, and everybody wins. So I just wanted to say, I agree with you. Think big for sure. Look at big problems and try to solve them, but don't do it in a, sorry to say, stupid way, right? It has to, there are still some business things that have to be considered here.
Yeah, I agree with that. We look at companies that are thinking big, yet building on solid unit economics. If the solid unit economics aren't there, we know they're not just then they're thinking crazy, not thinking big. And we want people that are thinking big yet building on solid unit economics.
Let me push on this question of the solid unit economics, the profitability aspect, or the profitability versus growth aspect, which is another controversial part that people talk about. They see companies remaining with bad unit economics or with non-existing profitability for too long for their stage. That sometimes people feel that there's actually no light at the end of the tunnel. You're growing, but you're not really reaching, or people don't know when that point of profitability is going to be. And we see that even with companies that went, not in Egypt, but in the US, all the way to public companies, and they're still not there yet. And that's putting a lot of doubt on that. So any thoughts on this? How do you think about that, especially when you're looking early enough? Shihab.
I think Basil or Rafa tackled it right. The issue we see with a lot of startups, everyone is focusing on GMV, looking in terms of how big is your GMV, what's the multiple on the GMV, without looking into unit economics. And in the beginning, it makes sense to look in terms of acquiring market share, but beyond this market share acquisition, are your unit economics healthy or not? Do you have enough margins on the gross profit side to make this a sustainable and growing business? So managing scalability and profitability, one of the questions sent by the audience was regarding that. No, we look into profitability, we look into unit economics, it's relevant. You should not be faked, and that opens up that we have to do a lot of informal commercial DD to understand how this business is operating, especially that most startups in the beginning from pre-seed to pre-series A actually compensate their revenues through promotions and so on. So you need to understand, since they're not booking it as actual revenues, is it really making sense? Will they be able to move this from a free model to actually getting these profits out of it or not? We see a lot of marketplaces today burning mainly on the unit of economics of the products they sell and trying to compensate it through financing. So they go into that direction. Basil, كمل لو عندك حاجة.
No. I'm the number of times I've had to explain to people cost of capital is very different in emerging markets than it is in the US market. The number of times I've had to explain that, and entrepreneurs look at me and they're like, what are you talking about? And if you can add that, please, Ayman, to your curriculum, I would love it, right? Happy to come and help explain it if necessary. When you have a cost of capital in Europe that's actually negative, and when you have a cost of capital in the US that's very low, the way investors look at how margin works is very different. That doesn't apply here in emerging markets. We have a high cost of capital, which means you can put the money in the bank and make an interest that's higher than working the money in a business. So you have to beat that cost of capital, and understanding that means you have to have positive unit economics is an important part. Of course, you can have a part of your business, or you can have something that you give away that gives you losses to get something else, like you give away the subscription in order to get transactions, or you give away the transactions in order to get subscription. We understand all of these, games, if you like. We're all business people, right? We've all had careers in running businesses or managing businesses or whatever the case might be. So we understand all of that, but you can't sit there and talk about a forever negative margin. It will come and get you. Investors at some point will just say, enough, either make money or I'm not continuing the journey with you, right? And that will come and bite you hard on valuations, to your earlier comments.
And I think we're starting to see companies that are in very advanced levels of growth that are still burning cash to capture market share, even though they should be at a point where they're getting the unit economics to become positive and profitable, and start actually pushing the market. And it's honestly, it kind of gets irritating sometimes to see that happen in companies that are on different levels of growth, not the early stage, but later levels, when they should start balancing things and generating cash and getting ready for an exit, and they still don't want to do that, and they still want to keep relying on more VC funding and the same mindset. The game that works for some time, it cannot continue working forever. But let me jump into another, actually, before getting off the talent part, any thoughts? Ahmed, you wanted to comment, and you commented on talent several times. Any thought on the kind of talent that we're seeing here? And now Ahmed is back, so we'll start getting her back in the conversation, but we'll give her some time to actually observe the conversation. Ahmed, thoughts? Are you still on mute?
Sorry, seeing talented individuals come into the market. Okay, I mean, you have 4 people here who weren't in this market 10, 12 years ago. Okay, local Egyptians who are in the market now as VCs. There's probably 10x that are in the market as entrepreneurs. So there isn't a formula, right? There's a breadth of, a talented person when you see him, right? And like Bessa said, we pass the ball a lot, right? Not everybody's a point guard and can shoot, and somebody can rebound, somebody can do something else, but they're all necessary. And we all really do kind of complement each other in different ways, right? And even when we do compete, it's good for the ecosystem.
Yeah, and I think it is a more fundamental, I agree with Ahmed. I think there's just a more fundamental piece of this. I see a lot more people who are proud to be entrepreneurs, whether they're early from when they graduate from university or whether they're later on in their career, that it's no longer like I'm an entrepreneur is no longer a lesser job than being an engineer or a doctor or any of these traditional things that people used to do. And my generation, when we graduated, everybody wanted to work for Unilever and Procter & Gamble, if you remember, Ayman, right? I don't know why that was exciting. It seemed like it to a lot of people, or Pepsi or Coke or whatever. Today, I don't hear that from the new generation. And I honestly think that's awesome. I think that's really game changing for society, for nationalism, for pride, for everything else.
And by the way, you do hear different themes, right? Leslie, you do hear different themes now, like sustainable agriculture. That's a theme, right?
True, but at least It's something better than selling Pepsi and Coke. I'm sorry. It's just I personally I can't imagine doing that. I can't even imagine thinking about that now. Although I did an internship at Procter & Gamble, I think, in the summer at engineering, and I thought that was the coolest thing I've done in a long time. But my point is, I like the pride. It's more than just the choice of talent. I like the pride that's coming with it, because some of that pride manifests itself into passion. And honestly, if you're going to be doing this, it's a very tough job, right? This is a very, very tough job with a very difficult days. And if you don't have that passion and that pride, I think it doesn't exist. You won't sustain yourself through it. So that's just my observation, especially that I've been away from Egypt for so long, and now coming back and spending more time in Egypt, that pride has really been the most notable thing I've seen.
Yep. On that note, Basil, on entrepreneurs' pride, when I used to work within the management consulting, I saw a lot of entrepreneurs who were basically happy to grow 5% per year. So their business is quite solid, is quite large enough. They're making good profits. They're making a good buck at the end of the day. They're basically millionaires, and probably they're doing a lot better than most founders of startups. But they don't have this drive to grow this business, this hunger to grow this business into something that is massive. And that is the major shift we're seeing in the market with the new age entrepreneurs. They're not content with growing at 20% per year. They want to either fail or grow massively. And this is aligned with what we're doing as well, or what we're looking for in startups.
I think with different business models, you get different cultural models. Hiroki.
Yes, okay, 1 minute. Yeah, that's interesting discussion. Also, as Japan, also we are having the discussion how we can encourage the entrepreneurs or entrepreneurship. We have Toyota, but we don't have Google, Facebook, Amazon. That's the question. Why? And at the early 2000, we had a chance, like there are a lot of kind of a startup company even in Japan in terms of like internet, but so for some reasons, we had not so many success story. That's why after 2010, still people like to work for like big banks or other manufacturers, like big company. Then now the result is where we are. But it's slightly changing, and so I think once we have more like success story in Egypt, and then I've heard about those things right now. So I think in the future we have more brighter future, and looking forward to it. Yeah.
But we have a gender issue, and I want to pass it to Emma, because I'm sure she has a lot to say on this. I'm sorry. I just think we can all be very proud about the entrepreneurs that are coming into the ecosystem, but we have a gender issue for sure. Sorry, Amel.
Absolutely, yeah. Thank you for passing the baton on that one. I mean, I really echo the earlier sentiments on now we're seeing so much talent coming into entrepreneurship, and I think it's credit to the work that Flat 6 Labs and AUC V Lab have been doing, from a decade ago, de-risking that scene, so that now VCs and more venture funding is coming and more talent it's now much more attractive. I keep telling everyone it's so much easier to raise money as an operator or as an entrepreneur than a fund manager. And I remember when I started this journey with Lotus, trying to get anyone to join as a partner, I was like, but I'm so happy on operating right now. Like, why would I ever go back to investing? Like people are just so proud and happy. And I think that's that's what makes it so exciting in terms of what Basil was saying, like there's national pride in creating something for Egypt, and people are following their passions and doing it, but not as many women are doing it. And I think it's not every female can become a founder, and there's a lot of risk for them. And I think just more from career and family and de-risking the opportunity for women is as important, whether it's through the accelerators, through venture, but even more so showing women the opportunity to work in those fast-growing startups and being part of the growth in the technology scene today. Like seeing more women CFOs and CTOs and showing them that it's not banking is not the most attractive or risk-free sector to work in nowadays. You don't have to be working for a multinational or a bank to have the good work-life balance and the stability, but that actually startups do offer much more flexibility, and you can work from home, you can have more access to opportunities and learning and a career trajectory that is as suitable for women. So I think, we need to have more women being part of the technology sector, not just as founders, but across the value chain.
Well, would love to see that. Ahmed.
So guys are better than girls at physical labor. Girls are better at everything else. Okay, everything else. And the thing that gets in their way is the lack of education of the men in their lives.
I'll challenge you on the physical labor too. I bet I can do more push-ups than you, Alfie.
I'll take that back. Okay, but it's very possible. Okay, but in general, I had to give something to the guys. Okay, girls get everything. Okay, but really, it's the education and enlightenment of the men in their lives that is the biggest barrier to their success in our society. Okay, fathers, brothers, husbands that don't allow them to pursue the dreams that they would like to pursue, all right, is really the biggest thing. And I would tell you the Flat 6 is very successful at having such a high percentage of female entrepreneurs in that for a gender neutral accelerator, because half our selection committee is women. And that's really a key
But what
thing.
happens, Ahmed?
Sorry?
Because we don't see enough of them at the later stage. So what happens?
No, I agree. And that goes back to the social pressure, okay? Because too many of them get a lot of social pressure to discontinue pursuing these dreams that guys are allowed to pursue for longer periods of time, right? And later stages, the VCs are mostly guys, and guys have networks and have a bias. And so we have been able to tip that scale a bit with Flat 6 Labs and having a 50% female selection committee, right? And it's fantastic that they're like Noor, heads, GPs, partners, full partners in firms like you, like Ayman, who are, who are going to hopefully tip the scale and maybe make a more balanced selection and investment process.
Yeah.
I mean, I've been in that space for long, and I love what you say, Ahmed. But honestly, I think there is more to it on the ground. I think there's a lot about how thinking about risk and speed and growth and scalability that I think for the women entrepreneurs that I've seen, they don't want or like to think about it in the same way that the VCs want to think about it in terms of numbers. I've seen that, I mean, more than 50% of the graduates from Egyptian universities are women, and probably more than 2/3 when it comes to higher degrees. And if we're looking for a small group of elite talents, I find them in corporate everywhere. I don't find them in high growth startups. And I would love to see some of them moving from senior positions in large corporates. This was an issue 20, 30 years ago. It's not the same level. And I would love to see them moving into startups. And I think there is something about the nature of how we position the discussion in terms of growth, failure, risk, that might not be appealing to women in the same way, that the funding and the interests are not aligned. I don't know. It's probably a more controversial and tougher topic, but
yeah, we can spend a lot of time.
It's a hot potato, but putting it back on the table. Basil.
It is a hot topic and it is difficult. And we've, in our Global Ventures, we've tried to reach out to female entrepreneurs and looked at, lunches and mentoring and sessions. And I know Emma's going to do a whole big thing about it in Egypt, and I think that's great. But I will say this, guys come talk to us way too early, and women come talk to us way too late. And I mean that in a sense of, there is a little bit about also what I think was mentioned around, you have to have mentors, you have to have supporters. I think VCs don't invest just when you come with, from the pitch. They want to build a relationship, and that sometimes starts earlier than when you're ready to actually raise capital, right? And I find a lot of entrepreneurs, male entrepreneurs in particular, they'll reach out really early. Hey, I want to talk to you about my idea. And you kind of have a first meeting, and then a second. You're building a relationship. And I think one of the pieces of advice, at least I think can be given is, at least for Global Ventures, but I think it applies to everybody on this call, is we want to build relationships early. And I'd encourage female entrepreneurs to build those relationships early by sharing what their idea is and discussing it and building that kind of trust that then leads to, okay, so we're ready to invest now. That's my 2 cents.
So what you say is women are normally more rational.
Yes.
So it takes them longer to, they want to have a solid case. They study it very well. Whereas I see really more men coming with immature ideas, which might be the crazy ideas which get you high growth, whereas the rationality may have an impact in terms of the pipeline.
Yeah, I'm not taking away from the biases that Ahmed mentioned. I'm not taking away from any of that. There is other issues as well. I'm just saying this is one of the most notable things that I've come across is, you know, somebody does 5 minutes of research, puts it into 5 slides, comes and says, hey, I want to raise money. You know what I mean? Like literally. And then on the other side, it's like, I've been working for 2 years on my business plan. I built a prototype. I got 20 customers and I haven't spoken to any investor yet. And you're like, why didn't you come earlier? We could have had this discussion way earlier. We might have been able to support, you know. So, I mean, again, I'm not taking away the bias. The bias is there. I think it's well spoken about in academia, in research, in all sorts of places. So, but this is just a piece of advice, I think, I would say, because as we reach out, we find a lot of female entrepreneurs are actually made a lot of progress, but are just not sharing it as much.
I think where the language everyone is speaking is women or men. I think the best is women and men. It is, yes, I tend to agree in men have a tendency to wing it a bit too early without the proper preparation. So if women can counter that by actually doing the right research, then the combination of both would be fantastic. And I think this is what we miss in the ecosystem, on the fund level, on the startup level, on the corporate level, on everything. And I think there are many studies that were done that show that once you combine both men and women together into a business, wherever that business is, they probably outperform a gender-dominated business, whether that be men or women, by around 20%, and that tells a lot. And I think this is something that we should all be striving to work towards finding, which is this balance of both working together.
And talking more to each other, I think the literature is there about, how, from the funnel up as capital allocators, once you have more diversity among capital allocators and among GPs, and then it funnels into more, higher returns, but also more female founders and more underrepresented and more diversity in your portfolios and hence higher returns. But I totally agree with this, that a lot of the times the women that I personally mentor as founders, because they've been working on whatever, their sector or area of expertise is, and they're so passionate about it and so protective of it, that they, they shy away from talking to investors, or also kill it because they're not, as polished in terms of how they're presenting it or the business plan, especially on the monetization front. And the earlier you talk to them, the better, which I think honestly is the job of investors, right? Like, you're out there to generate good ideas and generate, differentiated investment opportunities, and helping the underrepresented earlier on and developing that relationship is. And I think everyone on this call does this work and sees the problem of why with female founders specifically, the developing that relationship early on is more difficult, which is why I'm in business, I guess. But I think a big role is for the accelerators as well. And I think, working in partnership with the accelerators, because I see the returns of, what you guys have been doing, really shows what the Egypt that we're experiencing today. And I think having more gender neutral, more gender lens accelerators and incubators, helping them early on, because they feel more comfortable in those environments, right? And I think VCs working then actively with them, with the accelerators at that level can really help a lot.
I hope so, and I think you're absolutely right that starting it at the early stage is probably something that's more important. Let me jump, as we get closer to the end of the conversation, let me jump to actually talking about different dimensions of the future. So all of you are building portfolios that at some point in time, 2, 3, 4, 5, 6, 7 years in the future, you're planning to exit. So I want to ask you first a couple of questions about the prospects of exits. Exits have been very rare in the region. We started seeing few more. We've got the couple of big ones that everybody knows about, Kareem and Sue and the like. And we've got actually a nice flow of smaller ones, even though many of them were not very profitable. But at least we started getting the sense of acquisitions, some cross-border acquisitions. So what are your thoughts about the potential for exits? You're all, I mean, especially, let me start with Ahmed, because you've had probably the oldest portfolio in Sawadee. Basil has probably a couple of years until he starts thinking about that, because he started a little bit more recently, and Shihab will have this problem probably by 2030, but you started early, you have a portfolio. What's your thought about that portfolio? How is it doing, and what are you going to do with it?
So I think, by the way, I think the Sawadee portfolio, Bess and I started at the same time, probably 2.5, 3 years ago. Okay, but the Flat 6 portfolio has had a few exits. Some early Sawadee companies, we did have, at least one exit. Kenjin, if you remember that company, was sold to Samsung. This current portfolio, I think all of us are looking at our portfolio and thinking of, which one of these is going to be a unicorn, right? And how do you allocate? Very comfortable about this one versus that one. And how do you allocate your human resources and balance it in your portfolio to the companies that traditionally you've tried to fix problems and are taking your resources versus the 1 or 2 home runs that are going to make up for the 10 mistakes. So I think I'm comfortable saying that, I'm expecting 2, 3 unicorns out of our 15 companies, right? I would rank, if each of our partners ranked them, they'd rank them slightly differently on what they think the odds are, right? And which one's their favorite, which goes back to the personality and the chemistry discussion we had earlier. So overall, I'm very optimistic. For our portfolio specifically, I'm very happy with the majority of our portfolio. I don't know what the curves look like in developed markets when VCs start writing off companies versus doubling and tripling down. But we've a couple of companies where we've done 3 rounds at 3 higher valuations, which is as sure an indication of optimism as you can have. Let's not say indication of success, indication of optimism that we have participated 3 times at 3 valuations going up. So that's probably about the limit, I think, for VCs is to participate in 3 rounds. It's rare that a VC will participate in the 4th round. The company will have grown out of the range of where they're investing.
And Ahmed, for the, let's say the 2 or 3 potential unicorns that you see, what do you see the end game is? Local acquisitions, consolidation, regional acquisitions, IPO in the Egyptian stock exchange. I mean, where do you see the road?
Can I tell you really a long time, and I don't mind.
I think you're cutting off.
Can Ayman, I told you I need to leave a little bit early, so can I chime in on this question and then I'll drop off after that, if that's okay?
Please go ahead, Bassem. Go ahead, Bassem.
And I'm sorry, guys, if I've taken up too much air here, but I just quickly on this one. First of all, the market is so young, the industry is so young that this idea that exits should be already happening in some big amount or numbers is really an illogical thought process in my mind. Let's just start there, right? The question you have to ask yourself is, when did the tech industry really start in the region? And when you put the start line, and people say, oh, but the earliest technology company is, I don't know, X company, 7 in Mom's World, in Menus, whatever, and it's 7, 8 years old. I would say those entrepreneurs were really early. The tech scene in terms of investors, and in terms of industry, in terms of everything happening is only a few years old. Take your guess whether it's 4 years, 3 years, 5 years, you can take a pick. And the average cycle for a company, whether in the US or in Europe or anywhere around the world, is probably between 5 and 7 years, and sometimes takes up to 10, 11, 12 years to mature and exit. So we're very much at the early stages of this industry. So let's not talk about exits as though they're supposed to be happening in some big numbers already. There's a reason why some of them are not happening, in my opinion, because entrepreneurs are doing well, they're able to raise capital, they're growing, and they see opportunity for upsides, and investors telling them that there is opportunity for upside. So why should they exit? All right. 2, the reality is exits year on year have been increasing. We have seen more and more exits. We had limited options, and those options are increasing as well, whether it's SPACing in the US with Enremi, or whether it's listing of Fawri, which only was what, 2 years old now, 2.5, 3 years old. It's very, very recent. Or whether it's the Saudi Stock Exchange opening up with Gehez listing, and then the other listings that are now being planned, or the Abu Dhabi Stock Exchange that's now putting out regulations to allow. So people are preparing for a lot more maturity. And then last but not least is there's always exits happening in the background. They're called secondaries. People are selling and buying stakes and so on, and a lot more than people are announcing for obvious reasons. This is not public information. It doesn't need to be public information. Global Ventures did 4 of those last year. We sold 4 companies in our portfolio to other investors who wanted to take more stake in that company. And we felt that we had maximized our returns and we were willing to get out. Some people say we got out early. It's a debate. We got out and returned money to our investors, who then put more money into our second fund so that we can continue to invest in new companies. And the cycle is starting to evolve, right? So the idea that there somehow should be massive amount of exits already going on doesn't even make sense to me yet. Now, are there challenges to exit? Sure. Is there enough depth and liquidity in the market for lots of exits? No, but there isn't anywhere in the world for that matter, barring the US probably, which will always be exceptional for lots of reasons. And the reality is, I expect this year will be another record year of exits, and there'll be more and more happening. Many of them maybe not even announced.
I agree with you in terms of the lag between the growth in investments and the exits, which is probably 5, 7, maybe 10 years behind that. I think the question is more about what's the road for that and how do you see it? Because you're right. If you made an investment 2 years ago, you're probably going to wait 3, 4, 5 years ago, but you're still also thinking about it. At the end of the day, what's the end game for this company? Where do I see that? Any other thoughts, Hiroki? Especially you've been making investments since 2000.
Bye to everybody, because I have to run.
Thank you, Bassem.
Thank you, Ayman. Thanks, everybody. Very nice to see you guys. Take care.
Thank you, Bassem. Hiroki.
Okay. Yep. Thank you, Ayman. Let me start. So again, we have now 30 portfolio companies, and we have our fund life is by 2024. We have 2 years plus, and then we can extend another 3 years. That's maximum. And there are no exit yet. And Chipa Cash, now they are a unicorn company, and I don't have a concern on that, but let's discuss other portfolio companies. And I would say there are a lot of things I have to do in the coming a few years, but getting more optimistic compared to when I set up the fund in 2017. At that time, actually, I was not very sure how we can exit, but also somehow we convinced the LPs. But as mentioned, so now we have seen more exit story, and also once the startup company become a kind of leading company in that country or region, there is a potential that they can exit to a corporate and strategic acquisition. For example, no exit yet, but one of our portfolio company is a dialysis center, and that is the largest chain in Africa. They have 20 plus facilities, mostly in East African countries. Then what's happening is, across the world, there's other dialysis center chain, India, Europe, US. Then what they are thinking is, okay, when they should start business in Africa, and one of the easiest ways to acquire the companies. Also, when we talk about like tech companies, logistics, also there's a similar business model outside of this continent, and such kind of conversations are happening. And even that the timeline, there's a timeline is limited, and it's not even ideal, but also we have the option that we sell like secondary transaction before the company was IPO or completely acquired by another company. So yeah, so I see more like complete conversation between portfolio companies and their potential acquisition buyer of the company right now.
And I think the benefit.
Okay, Shihab and Amal. Shihab?
Sure. So I see the majority of exits in the local market will come mainly through strategic acquisitions, mainly from conventional players who want to get the upside from the tech side. These transactions will be either through cash outs for everyone, or what we are currently seeing is more like equity swaps and bigger structures. And there are a couple of transactions happening over this year, it seems, in the market. The regulatory side, FRA started regulations for SPACs and so on. So there are more opportunities coming out for local exits. But the home runs Ahmed was referring to, I think, will be more on a regional or global scale, especially if the valuations increased, justifiable valuations, as we see in some cases. The local market might not be able to absorb them yet. So they would have to go regional or on a global scale, what we see. Also on a seed from a seed to Series A, B stage, we see a lot of potential acquisitions or exits to regional players, mainly from Africa and also from the Gulf, who want to come into the local market and are acquiring a team with an existing license or existing infrastructure instead of reinventing the wheel or starting from scratch. This is also an exit path which might also exist over the next 2 years.
Very, very interesting, Shihab, and I think there will be some early exits, as you mentioned, for market entry purposes, and then there will be the local regional ones, and then the global. Amal, and then I see Ahmed also jumping in. Amal, go ahead.
Yeah, I think that basically this is the benefit of the maturity of the ecosystem that we're seeing today. So as opposed to, years ago when there were very, very few players in the market in Egypt, whether between the accelerators and local VCs, now that we have like more distinct, sub-asset classes within venture, for whether you're seeing angel investors actually exiting to VCs because VCs are trying to, get a good representation on the cap tables and be able to have significant ownership to be able to, whether it's to realize returns or to have, significant rise. So you're seeing angels being able to exit to VCs, and VCs again now better positioned to sell, whether to private equities or strategics or more secondaries, whether it's to the regionals, whether it's Africa, MENA players or global or global players that need to allocate a certain, can go a little bit below a certain threshold in terms of the investment ticket size. And the only way is to buy out some of the existing investors. You're seeing more of that being developed as we have more different players and more mature players in the market. And like Shihab said, there'll be definitely more mergers and acquisitions, whether it's pan-Africa, pan-regional, and that provides more exit avenues. What actually does excite me also to some extent is the role that corporates are starting to play. I think we saw more corporate players, whether local or international in Egypt, not knowing where to start in terms of should they be investors in venture, or do they take majority, do they take minority, what's their role, is there a synergy, are they competitor, are they infrastructure builders or competitors, or and to each their own story. And I think increasingly we're starting to see them be a good exit vehicle to some of the players around. So more consolidation, the diverse exit avenues, and like we heard earlier, it is also a young ecosystem. So it's a little bit premature, but it's a very important question. It's on everyone's mind. This is what ultimately everyone is looking for.
Thank you, Amal. Ahmed.
I just wanted to. First thing is, if you are an investor and you have a good company, you shouldn't really stress about an exit. You should be willing to hold it for a while. You should be really comfortable holding it for a while. You have a long runway. So there isn't pressure, because everybody's always talking exit. How are you going to exit? When are you going to exit? good companies are a rare thing. They're like gems. So be happy.
I challenge that, Alfie. I think for both the entrepreneurs in question and for the great entrepreneurs and for the investors in, you know, at the LPs in the fund, it's up to them to decide. Like, you can return the money to them and they decide what they want to invest in next, right? And for some of the entrepreneurs, you being still there as one of the early investors, if you don't have a role to play in the company anymore and they really want to, you know, get more other investors on board and have new partners for their next chapter, the fact that it's just a good company in your portfolio is not reason enough to keep holding on to it. I'm just, you know, I came in late to the party, so I can be controversial.
No problem, and I don't disagree. I don't disagree with what you're saying. Okay, all I'm saying is, no, we shouldn't be stressing that you have to exit, you have to exit, you have to exit. Everything you've described is additional variables that change the timing of when is the right time to exit, right? So I don't disagree with any of the points you made. However, I think it should be very clear, it's very unlikely that any large tech companies, unicorns, will be sold to local companies unless they are other tech companies, right? So most likely the exit will be a stock transaction between two large tech companies if it's going to be regional. Otherwise, it'll be to a global player because they have access to large pools of capital to actually buy out local companies at large.
Very interesting. Okay, I have one question.
On that note, Ayman,
Rafa, go ahead.
Yeah, if I were to add to that note, Ayman, at the end of the day, it's we're a population that's reached 103 million now. It's a very big market for any international player that wants to enter the market. If they find a good opportunity where a startup basically is defragmenting an already fragmented market, that becomes acquirable to them. If in the case like what happened with Alfie's Flat Six Labs portfolio company, Harmonica, you know, who would have imagined Match Group coming in and you know, acquiring a company in Egypt? But basically Harmonica did something which is extremely difficult, which is basically cracking a very socially sensitive issue and finding a way to tackle that. This becomes acquirable. So there will be that sort of opportunities as well that will be happening as we speak. We're a very fragmented market in general across most industries. So the opportunity is massive in that regards.
Yeah, very well said, and I think that's completely true. One question before getting to concluding remarks that I got from different people. Most of the VC space has been targeting companies in digital transformation. Started with e-commerce, then shifted to fintech, then shifted to health tech. And I think that's probably the easiest ones because tech is there, connectivity is there, scalability is clear, and it's actually low in terms of, relatively lower in terms of investment. So that's easy. But there are two sectors that several people have asked about, and I think it brings it to Ahmed's earlier question. One of them is deep tech, companies that requires a little bit longer in terms of the R&D cycle, and they're with all the complexities of deep tech. The second is whether you call them clean, green, sustainability, climate related, which is another huge area that's coming up and coming globally because we have to deal with climate resilience now that we've failed in actually maintaining our planet. Will probably have to be a little bit more resilient to survive. And there's a lot of investment that's coming in that space, but we have not seen neither the pipeline nor the appetite on the ground. Any thoughts on those two specific sectors or any other up and coming sectors beyond the digital, simple digital transformation plays? And I'll open it to everybody.
I can start on that. I think, yeah, I think on deep tech, you know, you have to also look at the other side. So what would encourage them to come to the table when you don't have enough deep tech investors? And, you know, quite frankly, well, I'll take that back before I say it, because I was going to say, quite frankly, none of us are deep tech investors, but I think Ayman and Alfie, you've done a lot in that space historically, but I don't, you know, we would have to have more investors with expertise, specifically that vertical expertise to make good investments in that space. And I think a lot of the entrepreneurs don't find that, and so they're resorting to international sources of capital and relocating outside of Egypt, because it's not just the investors, right? It's the infrastructure, it's the regulatory support, it's the research centers, the holistic ecosystem that would enable more deep tech solutions to come out of Egypt and entrepreneurs. And quite frankly, the good ones, don't stay around in Egypt that long because they don't have the other supporting factors. In terms of talent is just one, right? And climate is something that I'm actually more passionate about because, back in the day, I studied environment and development, and I told Ayman Ismail, this is what I want to do my PhD on. And he's like, no, trust me, you don't want to do that. You're going to business school and then figure out what you want to do with your life afterwards. But I've been spending more of our time, thinking of the sustainability thesis of the fund and much more focused on green investments. And I think, yes, there aren't that many solutions coming out of Egypt, surprisingly, that are more geared towards climate funding, because the perception is these are infrastructure investments that require millions, if not billions of dollars, so they're way outside of the venture scope. And I think that's a very limited way to think about it, because I think there are a lot that can come out earlier in the process and solutions, and thinking more broadly, whether it's e-scooters or mobility. There are so many other things that one of my favorites is the Gaddud in terms of cooking oil collection coming out of Latif Labs. So I think there is more diversity in the solutions when we think about it. But I think if one of the accelerators would take this up, that would be actually something to show the opportunity even better.
Thank you for throwing it back out. Any other Rafa?
It has to come. I agree with Amal. It has to come bottom up, and it has to be driven by accelerators. That's the natural cycle within ecosystems. On the deep tech, I think the one big constraint as well is competition. Deep tech founders will be competing against similar solutions across the world, across Eastern Europe, across India, across Southeast Asia, across the whole world. And so it's a tough environment, but yeah, I hope we do get some good founders there.
I hope so. Okay, now that we're getting close to go ahead,
on the deep tech part.
Yes.
Just very briefly, I think the thing that is underestimated is that anything deep tech, serious time to develop. The two we've invested in, their product development cycle is 12 and 5 years, right? Takes a long time, a lot of resources. Well, unless it's developed in a university environment, which there isn't a lot of deep tech, in universities here, and or in private, very, very well-funded experiments. So I think there's going to be a lot of opportunities. Why I think we all, if we can, should encourage those things here in the region.
Absolutely. There's a lot in terms of talent, but very little in terms of sustainable early stage funding that goes into the academic research that eventually spins off those directions. Okay, as we get closer, maybe to the end, maybe a 30-second comment on how do you see the future, the road ahead, maybe 3 to 5 years, where do you see the space, any specific thoughts that you want? Let me start with Hiroki.
Yeah, so again, we are seeing kind of like inflection point, and which happened in Nigeria some years back. This is my understanding. Now, Nigeria last year, they made like $1.8 billion, and the largest amount in this continent. So in a short term, 3 to 5 years, also I see that similar things will happen. I expect this happen in Egypt. So that's why I'm here in Egypt today. Thank you.
Thank you, Hiroki, and very happy to have you in Egypt. Shihab.
In summary, I see over 5 years more maturity in the market, mainly, and this maturity will result mainly in more data, information about the local context, benchmarking, seeing some localized data points on which basis we can value these companies. And today we're using global multiples, global valuation benchmarks, and so on, because and that's a typical evolvement we will see, and this will create a more efficient market, corrections and valuations for the ones who feel valuations are too high, or validation for valuations for the one who see the valuations to be going on the right track.
Thank you, Shihab. And I think the data point benchmarks is very important. Amal.
I mean, the future really excites me. I wouldn't be in the business today if I felt otherwise. But I think there will be pains. I think a lot of the companies, especially when I think of fintech and lending companies, I think as we are going now through different cycles, whether it's in the inflationary environment, volatility, global volatility, I think now there will be more pain points for the startups. Profitability, path to profitability will become, an even more emphasized discussion in every board meeting and every investor meeting. So I think these pains will lead to the maturity, which excites me, because now it's not just the hype of like, yay, we're seeing more entrepreneurs and more funding coming into the region, and this is exciting for all involved. I think maturity comes with a lot of pain, and it's let's see who has stamina to see it through. I don't even know if I have the stamina to see it through, but I'm excited to test it out.
Thank you, Ayman. Rafa.
Well, I agree with everyone. We're at the right place at the right time. But still, we still have to see how things go. It's still an uphill ride. It's a nascent economy. It's a nascent ecosystem, and there's still a way to go. And with the trouble happening up north in Europe now, lots of question marks. So let's see how things unfold.
Yeah, Ahmed.
No, I'll go last, Shihab.
Oh, Shihab already spoke.
Oh, sorry. I can't think of a more fun ride to be on. Okay, anywhere, at any age, right? This is just such a blast. And
I know what to get you for your birthday, Alfie. Now I'm gonna get you tickets to Six Flags.
I used to work at Six Flags when I was a teenager. But really, I think it's, I grew up watching Star Wars, or Star Trek, the future, what's the future of humanity? We're seeing some of it now, right? We're seeing those type of sensors and the really cool things, and, the screens and the holodeck and the tricorder and all the things that we grew up as fantasy things. The basic components of them are coming together now, today, and it's fantastic, right? So we live in the coolest time.
I think, like the Chinese say, may you live in interesting days. I think we definitely do live in interesting days. I think the one thing that for me looks actually interesting is the pace of change. If you look at the product development cycles, or the startup cycle, or the investment cycle, or any of these things, they're just becoming shorter, more aggressive, rapid, and with that, there's a lot that's happening around us. I always tell my students that most of what we're going to teach you is going to be obsolete before you graduate. So you've got to figure out how to learn on your own, because whatever I'm telling you is going to be like history rather than future when you graduate. So that's interesting, and I think it applies for all of us, is actually trying to figure out what's happening. Web3, I remember when Web2 was actually the thing. Now it's Web3, whatever that means. So we'll have to figure out what that means together. Thank you so much. This has been a fantastic ride, actually, and a fantastic discussion. And I'm sure all of us are in the same space. So we're going to meet again in a few months and a few years, and just going to probably make fun of our conversation and maybe how naive we were about how fast things are going to move, and maybe some interesting insights and interesting things that will happen. Thank you so much.
Celebrate.
We're going to give Vessel a hard time, say, how could you think that that's like joining Procter & Gamble again?
We'll see. We'll have to celebrate, all of us, and maybe getting something in person. Thank you, Ayman. Thank you, Hiroki.
We should do this in person. This is fabulous.
Next time we're going to do it in person, and I hope that we don't.
Yeah, go low tech and do it in person.
And or maybe and we'll do it somewhere on the metaverse. I don't know. I have no.
We'll have it at AUC or at the Greek campus, and we'll do it in person and broadcast it live. Okay.
That would be fantastic. That would be fantastic. Thank you, everybody. Have a beautiful day, and may you all prosper and have a beautiful, healthy day. Thank you, everybody, and thank you, School of Business, for organizing.
See all you old friends.